Good morning, everybody. Hey, I want to do a shout out this morning to my friends, Ralph and Nora, First Look Realty, their new cafe on the Circle. Great coffee. Went there this morning. And hey, let's support our downtown businesses. Would really and truly appreciate it. Hey, good guava pastries too. Don't miss out on those. But hey, yesterday, man, when I talked to you yesterday, things were looking really good. Well, they were really a disappointment by yesterday afternoon. I am hopeful that today is not the same. Dave and I will talk about that here in just a moment. Please stay tuned as we get ready to discuss what the market looks like at the open and what's causing earnings to be the way they are. Hey, Dave will be with us, and that's next.
Van Highlands, Spin Doctors there. I am Morning Dave. We are at 8:38 now. No. There, that's what I asked mine. Good morning. Welcome to Finances here, checking in to see what Wall Street's doing to your 401k. We always check in with Phillip Statler from Statler Financial Services in downtown Sebring to get a bird's eye view as to what's happening in the markets. Phillip, good morning. How are you?
Hey, good morning, Dave. Doing well today. Welcome to Tuesday. Hey, October 20th. It's hard to believe that we're 2/3 of the way through this month.
Yep, and we're getting to the meat of earnings season as well, and we got a passel of them, but we start out the morning first setting the table because yesterday we were halfway optimistic starting the day, and then it pretty well hit the flush handle. Dow was down by 411 points, NASDAQ down by 193, Standard & Poor's down by 57. I'm assuming that's stinking thinking on Stimulus Act rumors. Am I guessing right?
Dave, that's the only thing I can attribute it to, Dave. And it's crazy because you and I were talking yesterday. Everything looked really good, and it ended. You're just like you said, in the toilet. So I'm hoping today is not going to track the same way as yesterday because we are at least green this morning.
And that's always a good start. I do read that there are rumors floating around Wall Street that's buoying us up a little bit this morning that they're quote unquote making substantial progress in the stimulus talks. So long as the rumors survive, we'll go up. But as soon as everybody says, well, go get bent, we're not going to talk to each other anymore, expect a knee downward on the curves if that's what happens. And the cynic in me says that's probably a likely outcome. How about you?
Yeah, what are we on a deadline for sometime tonight? That's the 48 hours for Miss Pelosi. That's her time frame, and then what happens then if they don't have an agreement? Well,
they'll extend it by 2 days.
Right. We got to get something done sooner rather than later, and they need to quit using this as a political football.
Yeah, that's the bottom line. Macro stuff out from the government data dump service this morning. We got some what looked like good news to me originally. Then you and I were talking before we went on the air, and it was either just about on or just about below expectations. Housing starts during the month of September grew by 2 full percentage points, up to 1.42 million annualized housing starts. And that was even a little bit less than the market expected, I gather. That was a surprise to me.
Yeah, it was that by about, I would say by about 40,000 as far as year over year or what they expected year to date or for the year. So, so housing starts was a miss. But
I was going to say, but permits actually overachieved by a little bit. And the growth rate, once again, I thought was going to be a world beater, but it was only a tinge better than expected. They grew by 5.2% on building permits taken out during the month of September to an annualized 1.55 million. Called you and figured, wow, this is going to be a gangbusters day off of those economic reports. The market expected almost that many, didn't they?
Yeah, they did. They expected 1,522,000. So, so it was basically, rounding, that's pretty close to in line with expectations. So that one being in line, housing starts being a slight miss. I think it's put a little bit of pressure maybe on futures. We'll have to wait and see as we progress through the show today.
Yeah, I got to kind of wonder. The other thing that I think might not be helping the futures any is a report out of J.P. Morgan this morning. Big press release on one of my tip sheets saying that J.P. Morgan is basically saying tech stocks have hit their peak and they're cruising for a bruising, and tech is not on their favored list at the moment. Well, you and I have been saying that NASDAQ has been kind of getting out of sight before it entered this last correction territory, and now one of the big banks is kind of saying that as well, aren't they?
Yeah, so they're just heaping on to what seems to be the Nasdaq not being able to get back to that all-time high number, which is one of the things the technical guys kind of look at on their charts as to, okay, if we can't get back up there, maybe it's going to be a retrenchment time instead of we're going to blow past it time. So we'll have to wait and see how all that plays out with the election and that type of stuff coming up too.
Absolutely. And NASDAQ being heavy with growth stocks that end up trading at a premium earnings per share level to begin with, you get to the point where eventually you're going to end up coming up with a point where those companies start getting held to the conventional wisdom multiples as well. The question is when that's going to end up happening.
Exactly. You're right. That's when is that going to when is it going to take place, and when are we going to be able to get past that and move forward? There's still some uncertainty within our economy, and until that really gets ironed out, tech guys may be in a little bit of an issue because of the gains they've had so far.
No, yeah, in an uncertain economy, buying a stock at 50 times earning is getting a little bit adventurous, isn't it?
Yeah, it kind of reminds you of back in was it 2000?
Remember that well. I was there at the time, yes. We got a bunch of earnings that have come through, including some household names that folks are going to recognize, right?
Yeah, they are. I mean, let's start off with a staple consumer products company, Procter and Gamble. They came out and beat by a little over 20 cents a share. Revenue was above forecast. And here's what I'm seeing today. Several companies are actually raising their full year guidance, Dave, and P&G, Procter & Gamble is one of them that's raising their full year sales forecast. Obviously, the demand for household products, cleaning products, and that kind of thing has been a big deal for them. They're trading up about 1.5% this morning, and they're really butting up against their 52-week high.
All right. I would assume a staples company would do okay during a coronavirus crisis, but it's good to hear them succeeding off of what they can sell, too.
Exactly. And the next one's kind of in the insurance world. That's Travelers Insurance Company. And they beat by about 9 cents a share. Revenue was above what they expected. They were able to get some gains in their underwriting, and their portfolio had some increased net investment income, which was a good sign for them. So the stock market's kind of helped them out some too. And they were trading up 3% earlier. They're trading up 1.7% right now.
That's one of the old insurance companies in town. I think they were one of the first, the big red umbrella logo and everything. Travelers I remember real well.
Yeah. So here's probably one of our big beats for the day. It's going to be Albertsons. Albertsons, a supermarket chain. We don't have any around here anymore. But they beat by over double what was expected. Revenue was above forecast. Get this number, a 243% surge in digital sales, online sales for them.
Holy crud.
Yeah. So some good things there for Albertsons. They're trading up a little over 4.5% right now.
Kind of get the feeling that that's going to be the future of the grocery industry as well. They order it online and then pick it up routine, don't you?
I'm thinking that's going to become more and more the wave of the future. I know my wife likes it, to be able to just call it in and come pick it up. And she's really liking that whole system. We do have one that's their numbers aren't bad, Dave. I mean, IBM reported yesterday after the market closed.
Mm-hmm.
And when it comes to earnings, they were right where analysts thought they should be. Revenue even came in a little bit better than expected because of their cloud services. But they're under pressure this morning because this is I think they said their third quarter of declining revenue. And their outlook for the current quarter is not much better, Dave. And so they're under some pressure this morning, down about 3.6%.
Where are they seeing the pressure on anyway? Man, cloud services is growth industry almost by guarantee these days, and the IBM name I would think would carry quite a bit of clout.
Well, I think the cloud services is what's keeping them up a little bit. I mean, in terms of keeping them where they are, they still have some of the old line stuff, right? That they take care of and they manage. And so they're not just cloud services, they got other things there. And I'm sure the other areas, maybe the old traditional stuff is weighing them down.
Somebody still needs service on that old PDP 11, huh?
Yep. So, hey, the last one I have, and I don't think I have any really update for the stock price because they're traded on a Swiss market, but Logitech again had a huge quarter. They beat by over 3 times what was expected. They came in at like $1.87. They were expecting 57 cents a share. So due to obviously the increase in remote work and education and those type of things have really helped Logitech as they continue to move. They were up huge last night before the market closed over in Swiss because they're on the Swiss exchange. And so yesterday they were up 16.3%.
Cool. I got to believe if peripherals are selling, that's good. That's a good sign for the PC sellers when we start getting their reports as well.
Yeah, that will be true. But even with that gain, they're not at their 52-week high yet.
Wow. All right. Interesting Duke's mixture of indications so far. Resetting the table, it was a green day that turned red yesterday on Wall Street, and I'm hoping that doesn't happen today. 45 minutes before we open, Phillip, what do the futures look like?
So they're green, and they have continued to do better as you and I are talking. Maybe we're doing some good, Dave. We've got the Dow up a little over 0.4%, back over 100 to $117 up. We got the S&P 500 up 0.4, up about a little over $14, and the Nasdaq's up 1/3%, or about $34. So good numbers there. Now the question is, can we hold them for the whole day? We flipped to the commodity side. Silver's up a little over 1/4%, and gold's down a little over 0.1%. And then crude oil is down 0.5% to $40.86 a barrel, Dave.
That sounds a little bit like where it was yesterday morning at this time. So we're kind of entering that cycle of up during the daytime hours and then settle back down into a trading range for the morning.
Yeah, it does. You're right. And so it's going to be, how that continues to weigh. We'd still like it a little bit higher. You and I would.
Yeah, we would. Mixed markets overseas. Asia didn't know what to think about yesterday. They were up and down all day, and ditto for the European markets. No trend available there midway through their trading day. Phillip, this is one of those times we've been talking about it. The market can turn on a dime, up or down, depending upon what the politicians do. Nobody wants to risk their retirement on a politician. How do I get a hold of you in order to control the risk on my retirement fund?
You're so right, Dave. There is only one thing that you, I, and everybody out there can control, and that's the amount of risk they have in their portfolio. And what I find is most people don't even have a clue of how much risk they really have. That's why I developed the financial X-ray to really dive down and determine what that risk number looks like. Give me a call at 863-382-0037 to schedule your financial X-ray, or you can go to my website, statlerfinancial.com. There's a link there to my calendar where you can schedule a time that's good for you. And then catch us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730.
Hey, and back here again tomorrow morning about the same time on Light FM. Phillip, thank you so much. We'll catch you tomorrow, all right?
All right, man. You have a great day, and I look forward to speaking to you again tomorrow.
Thank you kindly. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, remember, again, I want to thank you so much for joining us today. that, hey, the market continues to move up as we're closing out this morning. But if you don't know, again, how much risk you have in your portfolio, I mean, to the number, not that you're moderate or you're conservative or you're aggressive, how does that equate to a number for your risk tolerance? That's what's important. That's the only way to know if you're in line with expectations of yourself. Give me a call and let's get started with your financial x-ray. That number is 863-382-0037, or go to my website, statlerfinancial.com, where you can schedule your appointment right from the website. Have a great day. I look forward to speaking to you again tomorrow.